How's it going, everybody? Welcome back to the channel. My name is Jay, and today we gotta talk about gold. You see, gold is one of the oldest inflation hedges out there. People just say gold is a great hedge against inflation, and it's just been said so much that it kind of just goes unquestioned and gets accepted as fact. After all, for much of our history, gold was money. And many people will tell you gold is a better store of value than the dollar. But that still doesn't mean it's a good hedge against high inflation rates. People get really passionate about investing in gold for some weird reason.
I love gold!
And those are the kind of people that will gladly point out to you that you need over $16,000 in 2022 to have the same purchasing power that $10,000 had back in the year 2000. And the price of gold back in the year 2000 was $279 an ounce. Today, gold is around $1,900 an ounce, a 550% increase. So what's the problem? Why are you against gold? I will give you two reasons: risk and volatility. See, there are a number of risks involved with investing in gold, especially if you're investing in physical gold. In a bank account, your money is FDIC insured up to $250,000. That means even if your bank goes out of business, your money up to $250,000 is completely safe from that loss. Obviously, this is not so when you're investing in precious metals. And if you're buying actual physical gold, as many people do, you're opening yourself up to the risk of theft. Now, obviously this can be mitigated by proper storage, but then you're adding in the cost of your safe deposit box or your underground bunker or wherever you're storing your gold. And for people that don't know too much or don't keep track of these sort of things, they just kind of assume that gold is this boring, safe, stable investment. When in reality, gold and other precious metals are extremely volatile as well. If we look at just recent history, from 2012 to 2016, gold was down about 17%. Since then, the price of gold is up 40%. In fact, if you invested in gold 10 years ago, in April of 2012, you would have paid $2,035 per ounce of gold. Today, that's worth $1,852 per ounce. So you're down about 9% on your investment in gold, not counting inflation and the erosion of your money's purchasing power that you were so worried about in the first place. And considering that volatility in price, gold is much more of an alternative to something like investing in the stock market than it is keeping your money in a safe FDIC insured bank account. And it just so happens that the period from the year 2000 to today, where gold is up about 550%, is the absolute perfect time frame one could give if they're trying to justify gold as an investment. Because if you expand that time frame out just another 10 years and look from the year 1990 through today, gold lags the S&P 500 by over 500%. And if you look at more modern history, just 2012 through today, gold not only loses handily to the S&P 500, but it loses to that boring old savings account that's paying you the most meager of interest rates. And that brings me to the thing you really have to understand about investing in gold. The thing about gold is it's an investment that people flock into quickly in times of high amounts of fear. And it's an investment that those people get out of just as quickly when things turn just a bit more optimistic. So really, to get the best returns from investing in gold, you have to start playing the market timing game and win. And that's just not gonna be a recipe for success for the majority of us. And while we're at it, just to rain on gold's parade a little bit more, gold doesn't actually perform that well in times of high inflation. If we take a look at the past 3 eras where inflation was above 4%, gold performed amazingly in the 1970s. But in the 1980s and 1990s, gold would have been a terrible investment in those inflationary periods. And we can even look at our current environment. Inflation has been at multi-decade highs for the better part of a year now. And gold has returned nothing over the past year. It was $1,835 an ounce on May 11th, 2021, And as I sit here recording this on May 11th, 2022, gold is $1,824 per ounce. So while inflation over that time period has gone from 7 to 8 to 9%, gold hasn't protected you from that inflation at all. So if it's not for gold, where should we be investing our money to protect ourselves against inflation? I think there are 5 asset classes that will protect you from high inflation much better than gold will. And I spell them out all in this video right over here. So thanks for watching this one. Go check out that one, and I hope to see you there.